Would you give recent Fed regimes, if you're an economics professor, you give out grades, would you give any of these recent regimes an A? And I don't mean a Harvard A, I mean a real A.
Yeah. Well, you can't. I mean, obviously, I think the Fed maybe got to beat up on a little bit more than it deserves because a lot of what it was doing was being cheered on by many, many economists who thought that inflation would just never come. I think the one really big mistake they made was when they changed their framework at the end of 2021 and said, we're no longer going to look at unemployment being very low as something signaling inflation. We're going to wait till we see inflation. And that was just a bad idea. They're going to have to walk that back.
And they did that, and they also ignored a lot of asset inflation, that crazy stuff, SPACs and NFTs and you name it, meme stocks. They ignored a lot of that and said, no, we're still, regular inflation is 1.8%. We want to get to 2. Druckenmiller made that point. So to get it back to 2, they ignored all the things that you just talked about.
Well, there was a debate. And again, there's many people who thought that the forces bringing down inflation-adjusted interest rates and bringing, down real interest rates were secular, demographics, low productivity, inequality. There are like 1,000 papers on this. I think that was way overblown. If the real interest rates had stayed low, in other words, the Fed could afford to maintain 2% inflation at very low interest rates, you could justify those asset prices. But I've always been skeptical. I've always thought this would come to an end. I don't know about a crashing end, but not a pleasant one. And I think we're starting it.
You are not a market timer or even a stock market analyst, but what you're saying is I can't see how long-term that would be positive for equity prices. Do you think we'll continue to be rewarded, our viewers, by investing long-term in equities, Ken? Or are we in a period where there may be a reversion to the mean?
Well, there's been a lot of reversion to the mean already. I mean, you're more up on exactly, I think all the equity indices were down 21 percent at one point. They've gone up a little bit, but housing prices, art prices, Bitcoin prices. Yeah, I think there's a long-term adjustment. How brutal it will be depends a little bit on how fast the Fed wants to get back to 2% inflation. I actually think they shouldn't be zealots about it. I think we're facing very unusual supply shocks, and they should get inflation down to like 3.5 or 4, and then take their time the way Alan Greenspan did in the 80s and early 90s. That's not what they're saying at the moment, but I bet they come around to that once a recession starts really kicking in.